So this is Shiva. I'm going to be the host for the today's webinar. So welcome you all to the Fintech webinar series conducted by the CloudBankin. So today we have an interesting topic, innovations in MSME credit. So in this digital era, so we see a lot of changes happening in this BFS segment, and BFS segment is facing a lot of challenges as well as a lot of innovations is also happening in the industry. Everywhere we hear these three terms: digital, innovation, and technology. So while we are planning for conducting this webinar, we have been speaking with a lot of people in the industry. Most of them are coming up with a lot of questions such as, so how we can underwrite the customer without the credit score, and what are the non-conventional way of underwriting the customer, how I can onboard a MSME customer in a digital mode. So what is that POS based lending? What is the cash flow based lending? So we have lot of questions in our mind, and the industry is also expecting a lot to know about what is the innovations happening in this MSME credit. So let's, without any further delay, let's hear from our speaker. So we have our speaker, Mr. Ashok Mittal, who is the CEO of Press Loans. So he has more than 20 plus prominent experience, years of prominent experience in capital and commodities market as well as the banking and financial sector. So he also has a gold medalist in commerce and has also done masters in business management. So he has also acted as a speaker in more than 200 plus seminars as well as the conferences on various financial segments, and he has also received awards for that. Welcome, Mr. Asuk.
Yeah,
And
thank you
then
so
I
much.
have Mr. Mani, who is our moderator today. He's the CEO of CloudBankin. I think he doesn't need much introduction because most of you are the followers of his hashtag Money Speaks Money in LinkedIn. So he's a thought leader, and he's also has a decade of experience in BFS segment. He's also conducted more than 50 plus interviews with prominent fintech experts. So before getting into today's session, let me give a short introduction about who we are. So we are a cloud banking is a SaaS-based platform. We provide solutions to NBFCs, fintechs, and other financial companies. Our product, Cloud Banking, is a robust digital platform that completely automates the entire business operations of any financial institutions. So we have implemented our product with more than 50 plus financial institutions across 9 countries. Currently, our product Cloud Banking support 10 plus different loan products, starting from both secured as well as the unsecured loan products like business loans, personal loans, loan against property, gold loan, BNPL, and reason co-lending models as well. So, what are the products we are offering? So, we offer digital customer onboarding. So, if you want to onboard your borrower without any manual intervention or paperless, so then we have a mobile and web solution by which you will be able to onboard your customers digitally with KYC verified. And then we provide loan origination system. So our loan origination system is a low code platform where you'll able to configure the entire onboarding process as per your requirements. And we have a business rule engine by which you'll able to configure your underwriting parameters as per your requirements, and you'll able to disperse the unsecured loans within 10 minutes. And then we have a loan management system. So once the loan get dispersed, the entire loan servicing part can be managed using our loan management system. So we provide alerts and notifications whenever you want to send any reminders to the customers, and you can track your repayments, rescheduling of the loans, restructuring, as well as NPA management. Everything is happening within our loan management system. And then we recently launched the co-lending management system, which is also in hot trend in the industry. So our co-lending system supports both co-lenders as well as the lender repayment schedules can be generated, and you'll be able to split up the repayments according to that and charge split up, and the respective agreements can also be generated. So we with our applications you will be able to go digital today, and we call our application Cloud Banking as the end-to-end digital lending infrastructure for the future finance. Thank you. Over to you, Man.
Great.
Thanks, Shiva. Thanks for the introduction. And uh, I think, by the way, thank you so much, Ashok. And first of all, for the audience, right? I've been talking to Ashok for the past couple of months, and 2 weeks back, I met him in Associate Movement, and I was really the way he talks, right? It was really, I was really liked about the way he gave this session very interesting to the audience. So I personally asked him that can you also become our speakers for one of our webinars, and he immediately said okay, and then that's why we are here. Thank you so much, Ashok. Thanks for being here.
So Mani, first of all, I would like to thank CloudBankin and Habile Technology for having me here. It's a privilege. And secondly, I must say that I have also participated in many of your webinars where I have listened, seen other experts from the industry. I may not have so great knowledge, but of course, I think you have created a good platform, and I feel good about it that I will be able to share some of my thoughts with the audience today.
Super. I think, and yesterday we had a small discussion how we can give the webinar in a much different way, and he was saying that can we ask the audience to ask questions directly, right? So we are planning to take this 1 hour session, the last 20 minutes, 20 to 25 minutes, we are planning to allocate to the audience. Whatever questions that you have, feel free to post it in the right hand side chat box, right? So we'll myself and Ashok will be seeing those questions, and we'll be answering those questions in the end of the session. And you can also make it down whatever questions that you have, and feel free to ask it here. So without any further delay, I'll just move on to the questions, Ashok. Okay. So MSME, right? Can you please give the definition of MSME? How big the market? Like people want to know what is all about MSME. Can you please give it?
Yeah, sure. But before that, Mani, I would like to inform to the audience what we do actually. So before starting Pressed Loans, which is tech-enabled NBFC company based out of Delhi, is highly concentrated on MSME loans. We do very small ticket business loans, which can be unsecured or secured loans. Now, if you see MSME, micro, small, and medium enterprises. So we say that we are the first M of MSME, that means micro segment. So all the discussion which we will talk will be largely on the micro segment of this MSME segment, because that is about, I will say 95-97% of the total MSME crowd which we talk about. Now, let's not get into the theoretical definition of MSME. What are those people who are called MSME? These are the people who are entrepreneurs. Those who are self-employed, those who are trying to do some kind of business, trying to build some kind of business. Now, if you really see any person who is doing any kind of business, whether trading, manufacturing, servicing, whether B2B, B2C, D2C, whatsoever, that is in a way MSME, irrespective of how they are defined by government guidelines, and they can easily apply for Udyam certificate, and the moment you have Udyam certificate, you are defined as MSME, right? But what is this crowd? So they say it is around, say, 60 million people. That is around, say, 6 crore people. Now, if you put all the MSME together, they will be in the top 5-6 countries in the world. That itself is a country, right? This is the size of MSME crowd.
Okay.
Now, typically when we try to define this profile to us, who are these people? So they are people of any age. Generally, you will find age group of 25 to 35 years old people doing some business, whether again I say manufacturing, trading, services, something. And when we talk about micro segment, they are the people who may not have a great idea about various business aspects, financing aspects, or government rules, regulation, policies, compliances, etc., etc. So this is the segment whom they say MSME. In that, when you go higher, say from micro to small and small to medium, that is largely based on turnover of those companies and the capital deployed in their businesses. So earlier there used to be one definition, now they have put two different parameters based on which it is defined that you are micro or small or medium enterprise.
Okay, depends upon the revenue, is it? Okay.
Yeah.
Okay, got it. And what kind of percentage structure, like predominantly, or they will be on the private limited or a partnership or a individual proprietorship? What will be the major crowd, Ashok?
So if you really define the kind of organization structure they have, so when say again I go back to saying micro, so which is around 95-97% of total people, predominantly is a proprietorship firm.
Proprietorship. Okay.
Proprietorship, and within that proprietorship, many may not have registered proprietorship, which means effectively say having a current account in the bank and saying, okay, Ashok and Sons, Ashok and Company, Ram Sham and Sons. No. So some of them are running their own business, not having even a current account in the bank. Many of them. Okay. So they transact through their saving bank account, etc. Okay. But gradually people are moving towards having a current account in the bank. So you can call them as a proprietorship firm. Now, the moment you go to from micro to small and medium, so small will be partnership firm also, LLP also, and those who becomes small, medium, so larger ones, they might be lot many of them LLP and private limited companies also. Now we have SME platforms on the stock exchanges on NSE and BSE. So some of them, although very less, the number is I think around 500, 600 companies only, but those may be listed on SME exchange on the stock exchange. Okay.
Okay.
So that is possible. But again, when we talk about 60 million and then 600 is minuscule number, I will say. So larger crowd is micro, which is generally what we have experienced, maybe 25, 30,000 clients, which we would have assessed.
Okay.
Is generally proprietorship firm, I will say.
Okay. All right. All right. So as you know, right, Ashok, the audience from this webinar, right, predominantly they are from an NBFC space or a fintech space, right? So they are eager to know about what kind of onboarding process for this micro guys, right? For micro entrepreneurs. Say, assume that I would like to give a loan to the micro, small and medium segment, right? So what kind of an onboarding process right now it's happening?
Okay, so let us assume that those who are into lending space, whether they are a fintech or whether they are NBFC, tech enabled, non-tech enabled, whatsoever, right? So somebody is looking to lend to them through their organization. I also see a lot of Nidhi companies lending to MSME segment, lot of cooperative societies, etc. So there may be a good bunch of people here, I guess, right? Or maybe later on somebody will see recorded version. So let us say onboarding is two methods, I will say, which some of them may be compliant and some is practical side of this. And as we said, we will talk more on practical, how it happens and should be done.
Okay. Okay.
So if you really look, what you need to know from person, you need to identify the person who is asking for loan. So what we call as KYC, know your customer, which is two things, identity of the person and address of the person.
Correct.
So in a way, generally speaking, Aadhaar fulfills both the requirement. So if you are able to take Aadhaar and verify Aadhaar, then KYC part is complete. Because you are doing a financial transaction, you also prefer to have PAN of the borrower. So mostly you are able to get this. So as far as we are able to take this, it is fine. Now, whether you can take it digitally, verify it digitally, and onboard directly, I think is doable, and it is happening with the companies who have taken some kind of a tech platform. I have in fact seen a Habile technology platform where they directly link it to the CKYC of the customer, and if the customer already have their KYC recorded somewhere and that record is on the CKYC,
correct,
can have API integration with CKYC and directly onboard. Effectively, if you are able to verify CKYC, then you don't need anything else because it is already verified.
correct.
This is the simplest way which tech service providers are providing, and a lot of lending companies are using. Now, if not, then you can do Aadhaar or KYC. I think this broadly serves the purpose of getting the onboarding of the customer.
Okay.
Now, this is smaller part of the onboarding because this is just KYC. Now, other than that, what you would like to know from the customer is his financial details, non-financial details, some other information about the customer, his personal information, social information, etc. So that gradually becomes part of the process when you try to do it. Those who are not using any kind of technology, then what they do generally, they will take the photocopy of KYC documents, verify with the original, and then do the OSV, original seen and verified, and then do the onboarding. Now it depends at what level you are in terms of tech as a lender. So how much technology you can use. There are a lot many people who are providing services or API integration, you can do it. Now look from the borrower's perspective also, onboarding process.
Yeah.
So while we can build technology, we do not know how much tech savvy the borrower is. Whether he is having a smartphone or not, or if he has, whether he's able to use it efficiently or not, whether he knows that, okay, I need to update my phone number and let's say details in Aadhaar or not, or add change of address in Aadhaar or not. So there may be, you will always find a small percentage of people who are not so much tech savvy. So in that case, some assisted model is required. So you are able to guide the borrower that this is how the onboarding can be done, which is good for him in terms of a smooth experience.
Okay. So one is the assisted journey, and another is it's a normal journey given by the borrower, is it?
So you can define in three. One is completely digital journey, where everything is digital, either a mobile app or web, and you just put it there, it gets verified, and you right. Second is assisted, when it is through the digital mode, but you need to guide, help, support the borrower.
Okay.
And third is pure physical method, where you are taking the documents and doing original scene and verified.
So and in this space, right? Assume that a lender onboards an application, right? So what is the cost? What is the cost of acquiring that customer? We call it as a CAC, right? Customer acquisition cost. So what are all the variables that to be included while calculate the CAC? Because there are a lot of new age lending companies are coming here, right? So their cost is much low. But for this particular segment, that what you're saying, right? Like to understand what are the costs to be included. So can you give a brief on that, Ashok?
Yeah, I can, but I think a very wide question you asked me. Customer acquisition cost will depend on many factors. One factor is the location of the customer, whether the customer is living in a metro city or a tier 2, tier 3, tier 4 or village where the person is actually living. So it will depend whether you need to travel, you don't need to travel, etc. So one is the location of the customer. Second is the type of loan which you are doing, whether you are doing unsecured business loans or secured business loans. You'll find that most tech enabled NBFCs or fintech, they do not do or are not able to do the complete journey through digital mode for secured loans, where you have some kind of security or properties as collateral coming. It is easier for doing this whole process for loans which are not backed by any collateral. Then you just need KYC, and you also need some other document, maybe bank statement, GST, etc. So that way you can do it. So what are the variables? Your customer profile or customer location is variable. Your product is also variable, right? So the cost may not be able to define how you really put it. So you look at the parameters which you are doing and then decide the cost. Having said that, of course, if you do use digital method, let us say if I have to do CKYC verification, right, through CloudBankin, it is almost costless, negligible cost. If I have to do verification of PAN and PAN, Aadhaar is now a different method, but PAN or Aadhaar, it is still very cheap. It's not expensive at all. Same thing if you have to do physically and somebody has to go take a photocopy, check with actual original, then your cost and time is also higher. So cost is not just about money you spend, but also the time you spend on doing the transaction. It would be difficult to really put a number, but these are the parameters which anybody should look at. Customer acquisition cost. Now this we have spoken about the method of verification. How do you acquire the client? Whether you are acquiring client digitally through your digital mode, are you acquiring is through your some partners, or are you having your own team who is acquiring the customer? So this is another part. Having said, generally, I will say what we have experienced, I can share that generally we consider that your customer acquisition cost, including the verification cost, should be, let's say 0.5, 0.6% of the amount of average loan which you are doing. So if I have to put a number to this, let us say if I do a average loan of 3 lakh rupees, 300,000 rupees, and if I say 0.5% of that will be 1,500 or 2,000 rupees. Everything put together. I mean, everything put together. Everything plus the verifications. So somewhere that maybe a ballpark figure number which you can consider.
Definitely. I think that this is going to be a very important message for the audience. Let's see. Okay. So this is a very interesting segment, right? We like to understand the process of the underwriting, right? So what kind of data sources that you will take while doing the underwriting, and after collecting the POI and POA, right? Address and identity, then the onboarding done. And then what other data sources that you will take it for the process of underwriting, and then what exactly will fall under the underwriting, Ashok?
No, sure. So I will explain what we do, and I'm sure a larger part of that might be covered under it.
Yeah.
So we have a method which we call it pressed score, which runs on some small kind of algorithm which we have created. What we try to do, which is a normal stance which all the lending institutions use, that I want to check ability to pay and I want to check intention to pay.
Correct.
So for ability to pay, you have instruments, you have documents, you have bank statement, GST, financial data, etc., to verify whether he has ability to pay or not, right? You can calculate FOIR, etc. But how do you check intention to pay? That is the most difficult aspect. That can only happen through reference check, through verifications, through taking details, through his seller references, buyer references, neighborhood references, etc. Still, it is a difficult part. So what we have done is we have created as I said, a pressed score mechanism. So what we try to do is collect financial data as well as non-financial data of the customer, which means it starts from the personal information, family information, social information, right? These are, let's say, non-financial. Then on the financial side, you have bank statement, GST, and if it is a secured loan, then the detail about the property also. Okay. Although it's a very long list, I may not even remember the whole list, but let us look what the broad parameters we look at from non-financial parameter. So are you living in your own house or rented, right?
Right.
If both the places are rented, many companies may not even lend. Everybody would want that either his house or the business place should be owned by the person.
Okay.
And we hate it. So owning is also different. Say owning is by self or spouse, owning is by parents, owning is by brother or sister, owning is by relative, right? So who is the real owner of the place which is your own place? So we give score for everything. Of course, I think there is no rocket science. If it is your own house, your scoring will be higher. And if your brother's house or sister's house, then the scoring will be lower.
Okay.
Second example we can give is that what is your vintage in that area where you are living. So you're living for 1 year, 3 years, 5 years, 10 years, 20 years. So longer duration means better, right? So is your business experience. What is the experience in the business? 1 year, 3 year, 5 year, 10 year. So longer duration means higher score. Now all these are parameters which create your profile, right? We also have profile for some funny things. What is your education, right? What is your spouse education? So our experience, and this looks like lighter, but if the spouse is educated, then the loan default percentage or chances are lesser.
Oh, okay.
Of course, an educated person will always say that you should not be defaulting.
True.
An uneducated person who does not understand this, he or she will not be able to add value to the loan which you have taken to say should pay, should not pay, etc. Right? So we also have scoring for what kind of school your kids are studying. Studying, not studying, what kind of if your kids are, let's say, doing MBA or CA or MBBS, some professional course, then you will always value that person little higher. When the credit manager visits the customer, now if you look at when we talk, we would have kept our phone aside, silent or switch off perhaps. Business people normally do not switch off their phone. So if you are sitting with that person and he is not getting any business, any call, that means his business is not doing well. And if he's getting say 5 calls, 6 calls, then it means he's and you, when you are sitting there and you are trying to understand the customer, his profile, his business, so you can make out from the conversation, right, that this call is for a business purpose. I mean, there are many such small things. We also see that what kind of clothes that guy is wearing when we go and meet that customer. So there is scoring for that. What is the size of the road? That is the scoring for that. So there are various parameters which we try to understand, assess. Either they are given by the customer or they are captured when the credit manager visit, or they are captured automatically from geography. So if you put a pin number, you can find out what kind of area it is, right? So I will say try to understand the client profile. Now,
Okay.
similarly, when you look at the property, so property is a square shape or a rectangle shape or an odd shape, which is not really proper, right? So you can other than the value of the property, you can also look at what kind of property it is, right? So whether it is very thin road, kacha road, pakka road. So there are, I think, if I remember correctly, there are about 200 such small parameters which and 200 looks bigger, but it's not difficult.
Okay.
You can create an entire profile of the customer, right? Based on the profile.
But sorry to interrupt here, Ashok. I think the conversation gets very interesting. So how big the road and all these things that we are analyzing the customers. I mean, profiling. Basically, we are doing profiling of a customer, right? So assume that if the customer is doing some business, some random remote place, but still the financial information looks good. So then what will be the weightage of the scores that you'll give?
So very good point you have asked, and I was about to reach there.
Yeah.
So this is one aspect, right? Which is again we say non-financial parameter. Now, how much you have studied is non-financial. Then we go to financial parameter, which is one common aspect from MSME loans or business loan, whatever ticket size is, banking. So it's now again same. If I use any kind of softwares and I can analyze bank statement easily, so it's analyze the bank statement, find out average bank balance, find out credit summation of the customer, find out check bounces, inward bounce, outward bounce. This whole thing comes, I think, in less than a minute, right?
Correct. Yeah.
So you put some parameter and take that output. Similarly, you can analyze GST. So these two things are, I think, enough and more than enough to understand the financial aspect.
Okay.
Now coming to your point, these 4 or 5 things put together, we create. So each question answer of each question has some score.
Correct.
Either less or more, whatever. So ultimately, the customer arrives at some score. So we call it pressed score. Everyone can call them their own score, whatever they want to call it.
Okay.
This score we convert into 1,000 and then see how much he has arrived from 1,000, which becomes similar to credit bureau score. So we have kept a parameter that if his score, now if you remember, both things are taken together, non-financial and financial. If his score is below a particular level cutoff, then his application will be rejected.
Okay.
Now it means what? So if he has got extremely good financials, but very poor non-financials, we would still not give him the loan.
Okay.
Or say otherwise, he has got average, below average financial parameter, but his other score is extremely good, we still give him the loans. So now that when the score comes, we have kept parameter that below this we will not give the loan. As his score, now what happens next? As his score goes up, his profile becomes better, right?
Correct.
And as the profile becomes better, our rate of interest gets reduced. So when we lend, we do not lend at a fixed rate. We lend at a rate which varies. So our rate of interest to the customer in the same market, same kind of business, same line of activity might be different for different customers because of their individual profile.
Okay.
This whole thing is, for us at least, is automated. So that is how to answer to your question is, we try to assess the customers based on financial and non-financial.
And Ashok sir, like so I mean, can you give me a practical example that I mean, this is the customer where none of the NBFCs or none of the banks would have given loans to them, but as a press loans, we have given loan to them. Can you give such profiles of a customer?
So of course, yes. In fact, there are many. So maybe somewhere you will also ask. Most people ask us that how many clients are new to credit, NTC, or with no credit history, right?
Yeah.
Which effectively means they would have not got the loan, right? Either they did not apply or did not get. So we don't know, but let us assume there is some percentage, and which for us it is around 28%.
Okay.
So let us say 25 to 30% of your customers are new. Right? What we do, and I have 2-3 examples which I can really tell you. One is that we have a person, I think his name is Ayodhya Prasad. in Old Delhi area.
Okay.
He runs a tea stall.
Oh,
Now, for a tea stall, there is no way you can actually give him loan, right? I mean,
correct.
to calculate how much sale is doing, how much margin is doing, etc.
Right.
So when we visited, so this credit person, he was there for maybe 2-3 hours, and he saw how much sale he's doing. And we asked him, why do you want loan? So there was a nearby small area, commercial area. He said, Ki, right now I'm selling on the road, having a stall on the road. And he said, I want to buy this area so that I'm in a better place to make the tea and sell the tea.
Oh, okay.
So we gave loan to him. And I think in about, say, 1.5, 2 years, he not only paid the loan, but he was also better off, right? Similarly, in South Delhi, there is a guy who was running and this is a term which has got some political attraction also.
Okay.
Pakode wala. So there is a guy who sell pakoda on the on the stall, and then give the loan to him. Again, he expanded his business, and then now again pakoda wala mein there is no financial, and most of these people they have very poor or below average banking.
Correct. I was about to ask that. How will you get that financial parameters?
So their banking is actually not great, almost zero types. No GST filing happens for them. So you have to really look at how much cash flow they are generating from their business. That is more of on the practical side by looking at now spending little more time with them. Now, I'll give you another example. In fact, I had visited that customer in Jaipur.
Oh, okay.
So that was also a guy who was making tea, but and this is my favorite example, which many people who are listening here may get some idea on this. So a tea guy sells tea, but he also was selling patties, right? You understand that triangle thing, patties? So it's a eatable thing. Some people will understand.
Okay, yeah.
Okay, so this guy makes that something snack.
Okay.
That snack is costing him 5 rupees, and he sells at 8 rupees. But if he heats up and put little bit of onion, right, the same thing he sells at 12 rupees. So the additional cost for him is 1 rupees, and additional price which he was charging was 3 rupees. So look at the margin. So if you are able to understand his margins, right, and which you can, when you are sitting there or you are talking to him, you can understand. Now, incidentally, this entire thing which I'm talking to you may not be completely digital model of assessing the customer.
Correct.
You have to really understand. So if I was completely digital fintech who is doing based on only banking, only GST, etc., I would have lost these clients. I have another very good customer, which I remember. He was making some ladies' garments, and if you see, there are some. I mean, on the ladies' garment, there are some hanging things, right?
Yeah.
Thread and a bowl kind of a thing. So this guy actually makes that additional thing.
Okay.
And he has employed about 100 women in the road itself, means the people who are living in that little poor area.
Okay.
So ladies during the daytime, they come to his house, they help him in making this thing manually, and they sell it, right? So I actually asked my wife that this particular thing which you're putting on your garments, which is very decorative item, how much you pay for it, right? And if there are ladies here, they will also understand. So the range which they pay is per piece between 30 rupees to 150 rupees.
Okay.
At the rate which you are buying from the retailer. For this guy, the cost of manufacturing that item is 3 rupees.
3 rupees. Okay.
3 rupees. So of course there is a value chain. So he sells it to the wholesalers send it to the retailers, then retailers send to the customer.
Yeah.
For 3 rupees, his cost is 3 rupees, and he itself is selling at around 6 rupees. So he has got 100% margin. No GST, no bank statement, most things are cash. He puts everything on the bike and then takes it and delivers, right? Okay, so no employees. So, but you understand the business. There are a lot of businesses in India which are done by micro segment of the people, and they are high margin businesses.
Okay.
So then he was changing one particular part in that whole thing from metal to plastic, and the cost is down by 50 paise. On a 3 rupees, if you are able to reduce by 50 paise, that is almost a 20% reduction in the cost. So if you understand the businesses, how the business is being done by entrepreneurs in India, then you finance to those people. I am very sure to this category of people whom I am talking to you right now, a complete digital model would have not given them loan, or maybe would have been quite lesser amount, not able to assess, because whatever he will tell you the story, right, unless you really watch it. So there are a lot many, I will say, examples like this. The financing done to people looking at their cash flows.
Okay. But Ashok, so when we ask, see, for these kind of profile customers, right? So we may not be able to get the digital data of that particular borrowers, right? So where we need to send a credit officer to the shop and understand their business, and then we'll be able to do it, right? But tell me one thing, how long will it take to underwrite for these kind of a customers, right? So say credit officer went to that office, staying there for 2 hours or 3 hours, and then come back, put the press score, right? So basically, how long it will take actually, Ashok?
Oh no. So let us say broadly, when the customer would have given the data to you, right? Documents or data to you. So you have already analyzed lot many things. You have done the KYC, you have understood banking, you understood. You just need to understand the client profile. So at least for us, what we have done is, you could have, if Mike, he could have done this whole scoring sitting then and there.
Oh, okay.
So please understand, when you do underwriting, it is not interview, it is a discussion. So let us say if you're asking, okay, how are you, when you got married, how many kids you have, where the kids are going, these are normal generic question in Indian culture we can ask people, right? So while somewhere it may be considered very personal, sensitive questions, but in India we have this very liberal point of view where you can ask, are you married, not married, when you got married, how many kids you have, where the kids are going. So it is a conversation.
Correct. It's not an interview.
It's a conversation. Consider this question answer as questions for creating his profile and taking a credit decision.
Okay.
So as I told you, say if there are 30, 40, 50 points, it will not take more than 30, 40 minutes, right? So if you are able to give him a decision, by the time you wake up from, you get up from, not wake up, get up from that place and say, okay, sir, aapka loan ho jayega. Your loan will be done. That is what the customer really want to listen. And at least in this micro segment, he is not sure his loan will happen or not. He does not know when you will inform. If he has to go to bank or your office 3 times, he does not want to go because his business gets hampered. He is the one person running the entire show.
Got it.
So I think in our case, we used to say that I can give you loan in 3 days, which you were giving. And 3 days practically is quite a fast process for this kind of customers.
Understood.
If it is entire digital, then it may be few minutes, but practically if you're able to do it, say 2 days, 3 days, it's a great time for them.
True. I think 3 days is a very good time for the borrowers.
So unless the properties or collateral is involved, if it is a loan not really backed by collateral property where you need to do the valuation, technical, legal, etc. But if it is just based on these parameters which you're talking, and if you're able to give the loan means if you're able to transfer the money to the borrower in say 3 days, he is extremely happy. Actually, if you really ask me, it is not about 3 days or 4 days when you are transferring the money. For this micro segment of MSME or businesses, the decision is more important.
Correct.
If you are able to communicate that yes, your loan is approved, but it will take so many days, they are okay. The problem is when you are not able to confirm or communicate that what is the decision. So in the typical, let's say, offline setup, when things will go, file will go, and 2 people will sign, etc. And if you're going to take 5 days and he doesn't know what is the status of his application for 5 days, that is the problem.
Yeah. I think they didn't even know where my loan is hanging, right? So True. Yes, sir. Yeah.
That is the issue.
Yeah, so I'll just give a pause over here, and then I'll take some few questions. Interesting questions came from audience. So one of the questions asked by Ankur is like, how are you basically acquiring these customers, right? And what is your growth rate and all? So over to you, Ashok.
Okay, so how are we acquiring? So let's say if it is directly to us and my company, we
Yeah.
largely acquire customer through our own team. So while we do some kind of digital footprint and we do communicate with the customers on the social media and all, but largely our own model is we do this through our own network. We have branches. Some of part of that is also sourced through the partners whom they call DSA, or let's say acquiring partners. In last, say, about one, you asked how what is the growth. So I will say in last about 15-18 months we have grown about I will say 18 months 10x post COVID. So
Okay.
if I compare from last year to this current year, we would be, I think, around 5 or 6 times. Having said that, I must say that previous year was highly impacted by COVID, so we should not
Yeah.
really look at the numbers. But
Okay.
of late, in last about 18 months, credit offtake has picked up quite well. Businesses are back to normal, so they
Correct.
need some kind of capital. So if
Mm.
I say I have grown this much, I think all the lending institutions, whether NBFCs or banks, they have grown quite fast.
Okay.
MSME focused NBFC has grown faster than other segments.
Okay. So I'll move on to the next question asked by Shobana. So what is the typical revenue or turnover of these MSMEs? Early turnover or monthly turnover for these guys, right? These
Okay, very good. I think that's a good question. So let me say about micro segment again. So
Right.
when these customers come to us, and I must say that these numbers which we are talking are largely assessed numbers, because they do, if they don't have bank statement or GST, so how do you arrive the number? So the number are arrived by way of understanding their profile and sale. Generally, we have seen that, and also considering that how much percentage of their business is happening through banking channel and how much is not happening through banking channel. And another point is GST, how much really GST reporting is happening or not happening. So
Okay.
if you look at all these parameters, my sense is the customer which we service, their annual turnover is between 40 lakh to 2 crore rupees.
Okay. Okay.
Now, if I say this range, which is not really a very wide range, so 40 lakh to 2 crore rupees. So generally, we will find that customer having 60 to 80 lakh rupees turnover annually for our set of customers whom we are.
Okay, got it. And another question being asked by WCMS Investment Solutions. What is the typical IRR and turnaround time, right? So IRR is the most important parameter that people usually ask while giving a loan, right? So yeah.
So let us understand the amount. Somebody asked amount, minimum loan amount also.
Correct. Yes.
So actually there is no concept of minimum loan amount, maximum loan amount. But what we do is generally I say on unsecured loans category, we go for a range of 50,000 to 10 lakh rupees. This is a wider range I'm telling you. And our average loan ticket size for unsecured business loans is 3 lakh rupees. Generally, unsecured business loan tenure is from 3 months to 3 years. Our average tenure is 27 months.
Okay.
MSME loans can also be done on secured, where the property is a collateral. Generally, here that loan tenure is between 5 years to 10 years. So our average is around 7 years. Or secured loans, our ticket size is from 3 lakh to 20 lakh rupees, the range. But our average ticket size is around 6 lakh. So generally, our loans are 5 to 8 lakh rupees loan, which are collateral loans. Having said that, please understand client profile and also understand locations. So we serve at tier 2, 3, 4 smaller towns, hence the smaller ticket size. Coming to IRR, again, as I explained earlier, so our IRR or rate of interest is not fixed. It purely depends on the client profile, which we derive through the model which I have explained earlier.
Correct.
So higher the score the customer has got, lower is the rate of interest. So that interest rate range is very wide. I think from say 12-13% to around 28-30% for unsecured loans. But let's say for unsecured loans, generally the rate would be around 24% per annum on a reducing balance method. For secured loans, it will be, let's say, few percentage down. Now, again, there is no fixed formula. But those who are interested to understand, you should understand this way, that how do you decide interest rate is two things. One is your underwriting, credit parameters, and you have been asking, tell us practically how it should be.
Correct.
So what is your parameters on which you decide? Okay, I don't think there is a time now where you say ki my rate is so and so, you will have to take it on this rate, take it or leave it. No, market is competitive, customer understands. But if you're able to say this, that this is because of your profile, then there is a buying. I remember when we started the company and when I told my team that we will not have a fixed rate of interest for lending, nobody accepted this actually. They
Okay.
said, "No, we need to tell the customer this is the rate." We said no. Trust me, in 6 years, we have not fixed the rate. And now everybody understands, whether it is our own team or whether it is customer, that interest rate is not fixed for this company. They will look, they will decide the profile, then they will charge.
I think many companies have started adopting this after building the profiling of a customer now.
I think this is how it should be, right? So
It has to be, yeah.
So this is how it should be. Generally unsecured. Now again, the rate of interest also depends on the ticket size. If you do the same unsecured loan for a slightly better profiled client where he has got banking, he has got good credit score, he has got GST, etc., and let's say a lot of MSME focused NBFC with they do a ticket size of let's say 15 lakh odd, then your lending rate is lesser, of course. So it depends on various parameters. For us, this is what it is, I will say, for those who want to really know it.
Okay. Another, I think Bhagirath is I think I have got the same question in my mind also. Like, so you will be sending your credit officer to underwrite, right? And
Yes.
then he'll be having his own biased information, and if he knows the Kirana guy, and then he will put a lot of good information, and then it leads to a better press score, right? So how will you basically address this problem? It should not be a human-based decision, right?
I had not expected this question actually, trust me on this. So frankly, we thought about it. Okay. So and our credit head, Mr. Sachin Sharma, and when we were designing this, we said, and I had this question early stage. I am not having too much of experience with NBFC. So I said, yeah, what if they know, or what if he want to give the loan? What if he does not want to give the loan? So the practice is always a credit manager's choice. I don't like your face, I will say reject, right?
Right.
So we said ki while we ask this question and the credit manager actually fills up the question, he actually doesn't know what is the weightage of each answer of the question. For him, it's a black box.
Correct.
And we also keep changing the sequence of question. We also keep changing the weightage of the question. We also keep adding or reducing the question answer. So for him, it is only the question and answer.
Okay.
He actually doesn't really know that what question have what weightage. Okay. So let us say, if I say whether your house is your own house or parents' house versus whether you are graduate or not graduate. So what is the score of each question? He doesn't know. Nobody knows this. So what they do, they keep just filling the answer, and then the score comes in. Then one fine morning, they find that these 4 questions are not there and new 4 questions have come. Okay. Sometimes the sequence might change. So that is how. And also, one more thing which we did was, earlier they thought that the first question is highest score and first answer highest score, last answer lowest score. So that also we changed. I mean, so
got it.
To build up that, right? That is one method of if Mr. Bhagirath is, I don't know, from lending. So one aspect is that. Second aspect is you keep rotating the credit managers. Not one credit manager always will do one area, one location, one type of business, but you keep so that also helps you. Got it. Having said that, there is one more aspect which I must say when this is a little phygital or let's say physical model of doing it. Sometimes, despite of whatever model you build, right, whatever scoring method you build, it happens that your credit manager comes and says, "Feel nahi aa raha. I'm not feeling, right? I'm not getting feel that this is a good customer." Okay. That instinct, that gut feeling, right? Correct. It happens. So sometimes the documents are good, bank statement is good, your GST is good, and suddenly he says, "Ki sir, I'm not comfortable. I'm not getting convinced to do loan with this guy." Yeah. What do you do? So this is another difficult aspect actually. So initially we were very hesitant. So we used to say, ki if the score is fine, everything is fine, you should do the loan. Don't go by your instinct. But I think later on we realized that sometime, not always, sometime, somewhere, either you send another guy to re-verify or reconfirm, or
Okay.
go by that gut feeling. In lending, that gut feeling is also very important. So sometime when you are in doubt, let us say if you are not very sure, better don't lend. So a small percentage of human intervention is sometimes required.
Okay.
Answers.
I think so. Sending another person to review, I think that is a very interesting answer. So that it cannot be a biased one, right? Yeah, got it.
It happens that to review means, let's say we call it in our language, we call it surprise visit. So
Okay.
if we have any kind of doubt, then we will ask some third person. You just go and check, go meet, check, and come back. So that is how we normally try to do it. But
Okay.
having said this, percentage is very low because we cannot really do it for every customer, a very larger chunk of the customers.
Okay, I think we have a lot of questions. I think we might have to extend the session till 5:15. So, sir, I need to take your permission, sir, for 5:15. Is
No,
that
as long as it is adding value to me, I am also learning from the questions, so it is fine with us.
cool? So, I've got a message from an anonymous attendee that how are you actually validating the customer profile digitally? Okay, so there would be enough challenge on onboarding a customer. There are a lot of forgery dogs. All these things are there, right? So how will you basically evaluating a customer profile digitally?
So let us say, okay, there are 2, 3 things. One is what is that you are verifying digitally, right? So as long as KYC is concerned, we find that the percentage of fraud or forged document is slightly lesser. I will not say zero, but then when you verify it through tools, you are able to identify. But yes, of course, you need to be careful whether the KYC documents are right or not. The highest level of forgery or fraud happens on bank statements for an unsecured business loan. So there what they do is they will give you a scanned copy or they will give you a copy which is scanned or photocopied, etc. So are you able to get the banks? So this is largely for unsecured business loans. The bank statement either directly downloaded from the bank. So nowadays most people have that facility. So you insist that it should be downloaded from the bank statement directly and give it to you. Or is a direct PDF received from the bank? If you just scanned one, then it may not be so much trustworthy in that case.
Okay.
Earlier, as I said, when you are doing the whole process, so none of the step or process is used in isolation. Your decision is combined decision of multiple things. So again, wherever in lending business, wherever you have doubt, even smallest doubt, better to verify once again. So when you are doing the underwriting, writing it, then it is good to verify. So bank statement is one aspect as far as unsecured business loans are concerned. Bigger risk is that we do a lot of secured loans which are backed by collateral.
Okay.
So properties are the most difficult thing to handle, and I keep saying it. That is the reason that most fintech companies have not got into secured loan business the way we do it. That is the difficult aspect which takes little longer time, little longer effort, cost to verify, ensure the properties are right, not forged, not fake, etc. This is the bigger challenge, I say.
That is actually the question asked by Avinash Chandra, that what kind of percentage that you will be giving it back by the collaterals for this micro segment, Ashok?
Okay, so Avinash, in fact, we have changed our strategy in last about 15 months. Earlier, we were doing, so 2 things happened for us personally, I can share about our company. So pre-COVID, our loans were largely on the metro and a larger sum of them was unsecured business loans. Of course, COVID, the way they had hit the business people, so they also hit us. So after that, we have changed the strategy to some extent. That one is that we do less of unsecured loan and do more of secured loans which are backed by some collateral. Two, the risk of migrating people is higher on the metro. So go to tier 2, 3, 4, where the people are already living there for many years. So it's better. So of late, in the last say about 1.5, 2 years, our percentage on secured loans have been increasing.
Okay. And he has also asked another question that what kind of ways, right, to reach out these scattered and fragmented segment, because it's very wide, right? So where to focus? Say, for example, smaller companies like new age NBFCs and fintech companies, they like to focus on one particular customer, right? We call it as ICP, ideal customer profile, right? What kind of ways to reach out to these guys, Ashok?
So first of all, what is ICP? And so I mean, there should not be any such term. Every person, every entrepreneur who is doing his business deserves a loan. So I normally say that when we give loan to him, we are not really mobilizing that customer. He deserves that loan because he's doing something, isn't it?
Correct.
So what you are doing is you are only helping him to grow that business. If you don't give the loan, then what he will do? He will not stop business. He will still do business, right?
Obviously,
helping him. So I remember we had done one small seminar in Delhi. There is a shoe market. In that shoe market, we went along with my colleagues. So there our agenda was not to sell the business. In fact, we told in that seminar, the entire discussion we had with them was only on two things, which I would like to recommend those micro segment business people, MSME, not to the lenders that way, but it helps the lender, okay, indirectly. We said to them, number one, please do file your GST. So normally people are hesitant, and I think this was around 3-4 years back, and GST was new, so they were scared that filing GST is a problem, it is very difficult, it is expensive, blah blah. So we actually kind of guided them that filing GST is in your benefit. GST, it is not going to go very expensive, and gradually the cost of filing GST will come down as more number of CAs etc. understand this, right? How to file. Two, we said please create a digital footprint. Most people have been believing that ye meri dukaan hai, my shop, it is running well, why should I do advertisement, why should I do on Google, why should I have website? So we actually guided them that you must have a digital footprint. You should have a website, very simple basic level website, have your profile on Facebook, have your profile on LinkedIn. Why? For this reason, that lot of people who are going to do digital customer acquisition, digital underwriting based on purely alternate data. There are a lot of people who do pure alternate data, right? So they will see you, they will find that you have a website, they will find that you are posting something, they will find that you are posting your product along with price, not necessarily selling it on that, right? But still. Correct. So I mean that kind of education for this micro segment is required, which helps them to take credit at better terms, and easy for lenders, right? So I guess from this perspective, the entrepreneurs, the micro segment of entrepreneurs should spend that small amount on building this digital footprint, I will say, and some kind of filing of GST etc. on time, so that their records are better. I mean, right? So this is very helpful. So similar way, the lender should also think that what is my what you call ICP. So which kind of customer I should do? Correct. Every customer deserves. So now what will differ is the loan amount. So to someone you will give 1 lakh rupees, to someone you will give 20 lakh rupees. One. Two, your lending rate. Interest rate. So somebody will lend at 15%, somebody will lend at 30%. So there is a customer at every price point, right? And thirdly, the loan tenure. So the best score which we create, with the same score, we also decide the loan tenures. Okay. So you can also decide the loan tenure of the customer. So now the unique point which we try to explain to people, and those people who are into lending here, I'm sure they know it, and those who do not know, they can understand that when we have these customers with us, and you try to bring them on from offline or cash segment to the lending segment, in the market 1.5% to 2% rate of interest is a common thing. It's a flat rate, and this is per month. Okay. So 2% per month is 24% per annum. That's a common 24%, and it's flat. Flat. So we tell them this way. So let us say if a very small businessman, they need 5 lakh rupees, he will take 5 lakh rupees, he will pay 10,000 rupees interest. Unfortunately, he is never ever able to pay 5 lakh rupees because of two reasons. One, he will not have 5 lakh together. Two, the person who has given him 5 lakh rupees, he is not ready to take money in parts. So suppose he say 50,000, 50,000, he doesn't want. He want 5 lakh together. So he can keep paying interest whole life, but his principal will not go down. After 2 years, he needs another 1 lakh. So this 5 lakh will become 6 lakh. His payment will become 12,000, but again 6 lakh. So we say if you are paying the same 2% to us, let us say, but it is on reducing balance. And after 3 months, 6 months, 12 months, or 24 months, your loan will be fully paid up. So it is not about rate of interest, it is not about the amount, but it is that one, how fast you can give to him when he needs it.
Correct.
Now let's say 8th of March is Holi. So 1 month before that, he need to stock. So are you able to give it faster, right? And I have given you multiple examples of what kind of margins these small and micro businesses can have actually.
Can have, yeah.
So then rate of interest is not really an issue. Are you able to give it timely? Are you able to tell him instantly that yes, you're eligible or not? Are you able to understand his business? This is what the business people want.
Interesting. So I'm moving on to the next important part of the session, which is asked by Pratik Nath. What kind of delinquency is happening in these kind of portfolio, Ashok?
Okay, so I will say again, not a standard number which you can talk about, but we should consider that depending on the customer profile, right? You should understand what is the delinquency. In unsecured business loans, in normal market scenario, excluding COVID, it can be between 3-4%, 3 to 5% range, I will say. Don't expect it to be very low. It would be in that range. On a secured portfolio, it may be between 1 to 2%. Now, I have a different perspective from delinquency, which may not be from lending perspective, but let's say generally what we think. Look at the companies who have defaulted. So the biggest defaulters in this country so far are the AAA rated companies. And these micro segment people are unrated.
Right.
So if your ticket size is smaller, right, and you have maybe someone from the family or friend as a guarantor also, and if the ticket size is low, and why he's taking that loan, if you are very clear about the end use, the default rate will be lesser. But I think these are the broad numbers which we have experienced.
Sure. And another question from Shivam, that can you tell us what kind of innovative credit products that we can give it to MSMEs today?
So, okay, let us say what we have seen again with a limited exposure which I have. The MSME segment especially need a working capital finance. Now, why I'm saying so, and so again going back to micro, going back to proprietorship firms which are very large in number and very large in percentage, they have a family of 4 to 6 people, and the one person who is running the business is the bread earner of the family, right? They hardly have any other income. All the expenses of that family goes from business only. If there is a marriage, birth, death, hospitalization, from where they get money? Ultimately, the money gets from the business, and sometimes to meet those exigencies are also taken as a business loan, right? Some people might take personal loan, but otherwise business loan. So they have to get money immediately in the business and then keep paying from the earnings, right? This is what the typical profile of this customer is. So if you're giving them loan, it is good. So it can be a term loan for 1 year, 2 years, 3 years, and they can keep paying you on monthly basis, on daily basis, or weekly basis, whatever way you can create the product. Second product is nowadays, which is again in demand and where people are comfortable, is some kind of channel financing, right? Dealer financing, channel financing, or whatever name you give it, invoice discounting. This is also a good product which is required from them. Then there are another, I will say, few products which we have seen in the market which people have been using. One is based on POS machine, which people are using. So when they use any kind of vending machine, companies are so if you look at companies like BharatPay, Paytm, MobiKwik, etc., when they are able to assess that everyday sale of this person from this machine is so much, then they have been designing the product and giving the credit to those people, which is I can say absolutely hassle free. Okay, But a word of advice for those people who are borrowing and also those who are lending is, at least what I have experienced is, the rates are extremely high, because when you are giving based on those machines and all, and you are charging every day 200, 500, 1,000 rupees from the customer, if you annualize the rate of interest, it becomes extremely high. So personally, I am not really in favor of those loans from lending perspective, because the rate being charged currently is very high for these MSME customers, and they, of course, they have margins, but they don't realize it because it's every day getting cut from their earnings which are happening on the machine. But else, if you are able to give them this kind of a loan which is hassle free, or a term loan where you can recover on daily, weekly, fortnightly or monthly basis, they are good for these kind of products. Lot of innovation on the complex product may not be suitable for micro segment. Small and medium enterprises, they look for these kind of products. Can I get support in giving a BG? Can I get a guarantee? Can I get a corporate guarantee? Can I get some import which I'm doing credit, export credit, etc. So a lot of products which people look at. But for this particular segment, if you are able to give working capital finance by invoice discounting or dealer financing, channel financing, whatever name, plus some kind of term loan, this is good enough. And trust me, the demand for this kind of simple plain vanilla product is extremely high. Extremely. We miss all the lenders put together are not able to meet the demand which is there right now.
I think interesting. One other product which is moving up really well is which I can add based on the experience what I discussed with other speakers, which is the buy now pay later option, where we can give it to this these players, where for example, for a retailer, for these kind of functions like Holi and all, right? So they'll be purchasing a list of goods, right? So where there are a lot of online portals where the buy now pay later options are there, where lender can go and tie up with these guys, and then they can give credit to the retailers. That is one of the products which is recently happening now. Maybe you can take a note of that.
Right, Mani, but I have a little point of view in this. Buy now pay later is largely consumer driven product, where they want that any small ticket happening 3,000, 5,000, 20,000 purchased by the consumer can be done. And of course, there is a cost involved in it, right? But else, yes, this is again the kind of invoice discounting thing, but yes, it is picking up, but perhaps more in the consumer space.
Right. And I move on to the next question, which is being asked by Sriram Ganeshan, where so basically cash flow projection and cash flow forecasting to be done for this micro MSME segment, right? So what are the key things to be keep in mind to while doing the forecasting and all, Ashok sir?
So I'm assuming that when you were trying to do the cash flow, you will go and sit with the customer, assess his business, and try to understand cash flow. Now there are two things which we should understand this. One is you understand his business and take the real data, whatever is available. A lot of data may be through GST banking, but a lot of data may be beyond that, which you can ask and understand. Second is try to understand whether whatever number the customer is telling you, including the margins, whether that is as per industry or not. So you really put the industry margin on it to try to understand it. So it is more about creating that model, for you internally to assess his future cash flows. My only small advice would be future cash flow. Do not put a formula in Excel and drive it, because a lot of businesses are also cyclical, right? They are seasonal businesses, and here the demand happens during the season time, right? So there are different peak seasons, so it never goes this way. So there will be time when it will go down also. So please do consider that business, depending on what kind of business that customer is into. So how much that impact of the seasonality that business will have, and please do include in that.
Okay. And another question by Shivam, what kind of challenges faced by NBFCs, right? When they give credit to these MSMEs? I think this is one of the questions, even I also have a note on it. Over to you, Ashok.
So let us say what kind of challenges you have. I'm assuming it is from the borrower side. Means there may be other internal challenges which are related to compliances, related to your team management, related to regulations, etc. Right? So it is from the borrower side. What are the challenges? So one common point, which let us say if the larger crowd is from the lending side, one common challenge is that with how that customer has been sourced. If the customer is sourced through some DSA or somebody who is aggregating, there is a high risk that the same application has gone to multiple lenders. Now, when the application comes to you at the same time to 5 people, there is no way you can check it either through credit bureau agencies and through something else, right? So
Right.
it is difficult. So it is important to know how the application has been sourced. Now, when I say how means the really how. So it might look to you it is digitally sourced. It might look to you it is your branch person has brought it. But if you can ask 4 questions, how whether he really went to the customer or his friend has given the file, you have to be a little wary of this thing. One. Two, when the file has come to you, is it month end or beginning?
Okay.
Probably there is a tendency that all the files will come together in the month end, so credit manager will have lesser time and also pressure is a little higher. So please avoid that. This is one challenge I will say which does happen in the sourcing or quality of the client profile when you're looking at. Another thing is when you try to, and we have also faced it, we have also faced a lot of challenges. When you go to the customer with a pre-decided time, date and all, right? And to the customer, then his behavior might be different. And if you go unexpectedly, his behavior is different.
Surprise is it? Yeah.
So that is another challenge which happens. Another risk is in the property cases. Property cases are slightly more difficult to handle from the legality perspective, consent of the family perspective and all. Now, one interesting thing I would like to share here with people, especially for those who are in the lending space, is say we have given loan to one young entrepreneur. He was, I think, around 28 years or so. Good business setup, his own house in the name of father and everything. And then that guy defaulted. So when we went to him, his father kind of scolded us. He said, "Why you give the loan to him? He's a useless guy, his son." So I said, "It is his house." He said, "It's my house, not his house." Father was not on the loan, right? So effectively what we did, we went to the shop, we saw the house, we look at the business, everything, whatever we discussed and gave the loan. We never spoke to his father. So
Yeah.
ideally, even if his father is not as a guarantor of the loan, it is good to talk to him. If the borrower is younger in age, right?
Correct.
So it makes a lot of difference actually. So you say, "Okay, I want to talk to your father," you will instantly know.
Exactly.
So these are some hygiene things which we learn over a period of time, I will say.
Super. I think one more question by Akhilesh Pandey, that what is the role of co-lending here with this MSME credit, Ashok?
So, okay, this is a little different than in that way, but co-lending, number one, let us say co-lending is extremely booming segment, highly supported by government and everyone. And it is good for the lender. As a NBFC, if you're a small NBFC, you can easily do 80-20 kind of a ratio where you share 20%, the larger partner will do 80%. Huge scope. So, but I have my own conservative view on this. So if you look from co-lending between NBFC to NBFC, smaller NBFC to bigger NBFC, it is extremely good product running successfully. However, I don't have the same opinion when it is between a bank, especially a PSU bank and a NBFC, then the speed of execution is quite low. Sometimes maybe frustrating. So it is low. Where it is taking a little longer time to get the execution done. So if you are a lending NBFC or you are a lending institution trying to do co-lending with a larger, say, bank or PSU bank, be prepared for a longer duration to really execute and implement it. Else, this is an extremely good model because you have proven your model, and then if you run on co-lending, you are able to service more number of customers.
Super. And one more question from Vijayan Govindarajan. Like, do you encourage balance sheet lending? If yes, what is the process of balance sheet analysis and scorecard for the same? Do you insist 3-year balance sheet, and what is the process that he's asking on the balance sheet lending?
So I can share my experience. Okay, how other people do is different. So when we do unsecured loan for micro segment where the ticket size is between 2 lakh to 10 lakh kind of thing, average ticket of 3 lakh, we don't look at balance sheet. all those, with due respect to the people, all those people who are into this segment with a revenue of 40 lakh, 60 lakh, 80 lakh. Now, I will tell you one very interesting observation. All these people, micro segment people, where the let's say loan ticket is around 3-4 lakh rupees, everybody files the ITR and everybody prepares his financials. Okay, all. Everybody has ITR of around 4 to 5 lakh rupees. So the guy who has no income, he will also file for 4 lakh rupees. And the guy who has 40 lakh rupees income, he will also file for 4 lakh rupees. So they file ITR in such a manner that there is an ITR, there is a small tax amount, so that you are keeping a track record very nicely. All the financials are prepared by their chartered accountants, which are technical document in nature, and these people are not involved in that. So I'm talking purely from the segment which we are talking, extreme micro, right? Nano. So they will tell the CA, kindly file GST, he will file. So on month end, quarter end, or year end, they will give the whole set of document to him, he will file.
That's it.
He'll only prepare the balance sheet. So we really do not value that too much, because if you have GST and banking and you have seen the business, then you take the call. Okay. Having said that, for a large ticket loans, let us say if you're doing 15-20 lakh or something like that on a secured loan, and you're doing 50 lakh, 1 crore for secured or whatever, then of course you need to look at balance sheet. But then when you look at balance sheet, then you will also look at notes of accounts. You will also, but when you look at balance sheet, that also means you will also look at ITR, you will also look at GST, you will also look at banking.
Correct.
So then it's a combination of lot many things.
Okay. So I think we have crossed the time limit, sir. So it's almost more than 115 hours. So I'll just end up with last two questions, Ashok, sir. Okay. So what do you think is the future of MSME credit, Ashok?
Oh, I'll say, like I said in between, that the demand for MSME segment is extremely high. And this demand is not just like that. The demand is because the count of entrepreneurs in India is increasing. One.
Correct.
The method they are doing business is improving. More people are getting onto the entrepreneurship, and entrepreneurship is whether in the trading or manufacturing or services, whether B2B, B2C, D2C, whatever. So there are multiple models which have come up now. People are even you would have not expected that people at a very small place, towns, right, are looking to do some kind of business. Now you read a lot of, I think on social media, MBA chai wala or something. So people are not hesitant to open a eatery, a food place, food stall, which gives them good margin, right? And the quality business they are doing. So I don't know the number, maybe 3 lakh crore, 5 lakh crore, 6 lakh crore. The requirement for MSME segment is huge. So irrespective of what town, city, location you are, irrespective of what kind of business segment you are, business, manufacturing, trading, what kind of segment, whether it is clothing, it's leather, it is ready-made garments, hosiery, and number of business, grocery, milk, dairy, what kind of business you're into. Even if you pick up one, it is huge business. Okay. I don't find anything else other than the MSME segment, which will be much more attractive, at least for next maybe about 1 decade, means at least for 10 years, you don't need to think anything else. Super. This is what I really feel.
Awesome. And last question is, Ashok, there are a lot of new age entrepreneurs, NBFCs, fintech companies are joined this webinar. So what is your advice for them, Ashok?
I think they will not be happy with the advice, because I've seen most people are not doing it. Whenever you start any business, right. And you look at the numbers, 2 things you should take care of. First and foremost is compliance. Please be very careful of various rules, regulation, compliances when you start your own business. It looks small, it looks easier, right? I will do this, but there are a lot of local regulations. You need to have professional tax, you need to have Shops and Establishment Act, you need to get registered for GST. So be careful with the compliance. The compliance cost and effort is extremely high. Whatever business you're doing, even smallest business. Okay. 2 is there is a rush on the valuation. So everybody thinks that I will do this and then my valuation, don't go for valuation. Now the time is gone. Look at the revenue, how much cash you can generate, right?
Correct.
So if you think on these 2 things, and if you are good at these 2 things, then everything else will automatically come. So people know this, and trust me on this, when you start business, people understand that what kind of business you are doing and how are you running your business. Based on that only, people will give you loan or capital.
Okay.
So I will suggest that please take care of these two things. Then you are expert, you are passionate about your business, you are doing the business which you know or understand better, right? So those things are kind of known or already considered.
Okay. Okay.
Take care of compliance. That is really very important aspect. Most people, especially budding entrepreneurs, completely miss out on this.
I think that is actually input for everybody, including me. So compliance and the second thing is the revenue, right? Not the valuation. Now in this particular market, valuations doesn't matter at all. Rather, the revenue matters the most, right? So that's a very good point, Ashok.
If you're creating value for your customer, then automatically you will see people coming to you and showing interest in investing in your company, whatever way, whether it is loan or whether it is capital. People do recognize, people keep searching for such kind of companies who are compliant and who are generating positive cash flow.
Super. I think that's one of the best way to end the session. And see, the success of the webinar is directly proportional to the number of questions being asked, right? So I can see there are 30 more questions which has not been answered. I'm really sorry for that. I think since we are running short of time, so I'd like to end this session. And maybe Ashok sir, we might have to conduct one more session with your time.
Sure, I will be happy, and thank you very much for not only to you, CloudBankin and Habil and Money personally to you, but also all these people who have been online and asking questions. Really give me a lot of pleasure, happiness, satisfaction that maybe if not all, to some extent we are able to talk to people, interact with them, and to my best ability I've tried to answer to them with the entire I will say honesty and frankness, whatever experience I had. Thank you so much.
Thank you so much. And the people who have not attended this webinar, we'll be sharing the link post this webinar. And I believe that we have given some value to the audience. And stay tuned with us. We'll be keep conducting monthly webinar, and then I'll keep you posted in my LinkedIn. Okay. Thank you so much all.